Okay, excuse me, folks. Coffee. Welcome to Thursday Night Stock Charts Live. I'm already a winner. I already got 2 likes, and I just went live. That's great. It's raining in LA. Good for you guys. How you doing, Mr. J? Richard. Cool. We should have a good group tonight. Another like. That's good stuff. Thank you very much. I'm kicking things off tonight, folks, with gold for a reason. Hi, Oliver. Hello to you. Thanks for joining. David, hi. I'm getting weather reports from around the country. That's great. Hey, Pat. Jay, how are you? Rough day out there, though. Anyone see J-Nug? Yeah, Pat was just talking about J-Nug. Terrence, how you doing today? What a day, yeah? Yeah, Black Thursday. But I have good news. I'm not coming on tonight to talk about doom and gloom. I'm not. I think that we have opportunity here, and it's hard to see the forest for the trees when we're trading too up close using daily charts and using intraday charts. But when you take a step back and you take a look at where we are technically and historically, we're coming in on support levels that are favorable, and we have technical conditions that are out there right now that are setting up, and I would classify as being somewhat unsustainable. Now, that being said, I don't think that we're done going down. I think that I'll put it to you this way: I ran a scan earlier this evening. Hey, Richard, Cherry High. I ran a scan earlier this evening. It's one of my scans called Extreme Oversold Scan. It's basically RSI down below 20, and it's never been more littered with stocks and a lot of S&P 500 names. And what I do is I do a glance, like 20 per page. And I just want to take a look at the candlestick action for like a 3-month time period, and I want to see how we're looking on the day. Are we closing at the low of the day, or do we close at the low of the day? Do we have a bullish reversal bar? And I have to say, I went through about 100. It goes from A to Z. I started with the A's going through Z. I didn't even make it all the way to Z. I just lost interest because I already had my answer. In all probability, we are not going down, and that's okay because I'm going to go over some weekly charts, some monthly charts, and we're going to talk about support levels. I did that this morning on Swing Trading Today. I think that, do people want to hear that right now? Is that something that's interesting? Because that's the tact I plan on taking, is how to identify when and where we might have support levels. So if everybody's cool with that, I'm on the right track. We'll proceed down that path unless somebody else has got something that they'd rather discuss, and we could discuss that as well. But I think that that's a real common question that's out there right now, is where might the bottom be? So, good, Richard. Cool. All right, we could do J-Nug. I mean, we could do Nugget. Yeah, yep. Okay. Good. Good. Cool. Okay. There's a reason why, before we go to the weekly charts, there's a reason why I'm doing the chart of gold. And gold took it on the chin today, and I went over this morning. I didn't like the setup. It was flirting between negative and positive. It was down $11, rallied back, couldn't recapture support. And I said this morning, I wouldn't buy it here because it can't recapture support. I was worried about it breaking this neckline of this head and shoulders setup, and that's exactly what happened. So, were it not for the headline I'm going to bring up in a moment, I would be more pessimistic on gold. But I get the feeling that we're going to get set up for a rally here. When you take a look at the weekly chart and how we're poised to close out the week right now, it's not pretty. I'll say that right now. So the statement I just made is a pretty bold statement, to be honest with you. And I'm not making a prediction that we're going to rally here, but I'm seeing a setup and it makes sense. Because when you take a look at what the proximate cause of this sell-off was that for all intents and purposes, the Saudis, the Russians, they took a torpedo and they sunk it down in the water and they aimed it right at our fracking industry and they blew it up. At the same time, they blew up our junk bond market. They blew up jobs. They blew up, I believe Predicted has it right now, that Biden is either on par. Yeah, look at how much they've narrowed the gap here. Take a look at it from a 30-day view. Here's President Trump trending down. Biden is ripping through the ceiling. So it's too early to say mission accomplished, but if you were Vladimir Putin, who do you want in office? Joe Biden, Bernie Sanders, or President Trump? So it looks as though you got to tip your hat to Vladimir Putin. So not good here. So the reason why I'm going back to gold is this article, and President Trump alluded to this earlier today when he was being interviewed. And Trump authorizes military response after deadly Iranian-backed attack. This is only going to escalate. If you want to fix the price of oil, if you want to put a bid under oil, how best are you going to be able to do that other than picking a fight with the Iranians? So call me conspiracy theorist, but think about what he's dealing with right now. And I followed President Trump since the 80s, and I have never seen the guy's voice break. It broke last night. Today he didn't look great. So there's a guy under a lot of pressure. And when things get bad at home, you have to find a bogeyman overseas to point the finger at. So, we're dealing with a virus, horrible virus. But this too shall pass. But we're going to need a boogeyman, and in all probability, the best bang for our buck is going to be with the Iranians to get a bid under oil. What else should do well if we pick a fight with the Iranians? All you need to do is go back to the beginning of January when where was that? Oh, February. Was it February? I think it was back here. Yeah, back here. When we were waiting for a response from the Iranians after we killed that general over in Iran. And you saw gold just rip through the ceiling, only to sell off. Now we've come full circle yet again. Do we break down? I don't know. Absent a conflict, I would be concerned that that's the case. So let's get to the weekly charts. All right, so I started off by saying that we wanted to talk about the positives and where are we at, and no place better to start than with the VIX. This is a monthly chart of the VIX, and we are getting eerily close to the October 2008 highs. We've never been that high since that point in time. That was October 2008 again. We are trading up and into the 5 standard deviation Bollinger Band. Not the 2 standard, not the 3 standard, not the 4 standard, but the 5 standard deviation Bollinger Band. We pierced it wholeheartedly back here in October of 2008 when we peaked at 89.53 on the VIX. Fast forward to present day right here. We are leaning into it. We haven't pierced it yet, but we are very, very close to doing so. Maybe it'll be tomorrow, maybe early next week, but it's going to happen fairly soon. Let's go to a weekly chart. We'll do a drill down here because it's important. On a weekly basis, we have RSI at 88.94, almost 90 in RSI. JNUG now. Yeah. It's on big volume too. This volume bar has nearly 87,000 shares traded. And this is a 30-minute bar. Let's go down to a 5-minute bar. 20,000 block. 27,000 block. This is not mom and pop buying 100 shares. You know, will it hold? I don't know. I think that what you may be seeing are traders positioned for the Iranian news. I don't think it's getting enough press. You're not really seeing a bid on gold. That leads me to take a look at, because the gold miners have been trading for the most part with the S&P 500, the overall market. Yeah, and we're catching a bid in the after hours a little bit here. We were down. We were coming back with the lows. We'll revisit this in a little while. Hey, Sam. How things over in Italy, Sam? I just saw you wrote disaster. Hopefully not over in Italy. You talking about the stock market? I hope. Okay, let's go back to the VIX. And we'll go back to the after hours session in a little while. Let the news begin to filter through to people. The VIX, again, RSI near 90. Folks, you look at this and you say, there's no way this can go any higher. It can go higher. But be that as it may, this is unsustainable. Can it go higher for the next couple of days? Yeah. You're going to get a pullback here. You're going to get a rally in the markets. There's a saying, when the VIX is high, you have to buy. When the VIX is low, you got to go. We were warning about the market being overvalued, technically overbought. You had to get out, keep a large pile of cash. And now I'm saying, you know what? You need to start looking at this market and start picking up some bargains as you find them. Do I think that we're not going to head down lower tomorrow? I think that we probably are. I want to see it head down tomorrow. What I'm looking for is a bullish reversal bar on the market. What is a bullish reversal bar? Let's go to the S&P. You know, transports. Transports are good for reversal bars. What we want to see is something that you saw similar to back here in December of 2018. We opened up horribly on Christmas Eve. Christmas Eve day, uh, new daily low. What did we do? Huge rally. Huge rally. That marked the end of this sell-off. Am I predicting that we're going back to all-time highs? No, I'm not. I'm not that smart. I don't know what these guys are going to do in terms of more stimulus. I have no idea what they could possibly do. $4 trillion worth of a bazooka didn't do anything today. But I don't think that I don't think that the market was done technically going down. I think there was far too many margin calls out there that had to be satisfied, and that's why you're probably going to see a continuation move lower here. A short-term bottom anyway. I'm not calling a bottom. A short-term tradable bottom anyway is built upon not waking up, watching swing trading today, courtesy of me, and seeing the futures bright green. You want to wake up, see my face, and me saying the futures are down triple digits yet again. However, as we've been talking about, the technicals are very favorable, and I'm classifying them now as being unsustainable. We are going to get a rally. VIX is not going to stay at these levels for all that much longer. Can it go higher? Yes. Can the markets go lower? Yes. But we're predicting that we are going to get a reversal fairly quickly. And I'm going to steamroll through these, and we're going to talk support levels. This is a horrible chart, the TLT. We're short of bonds right now. And I fear that trade may be very right, because this means that yields are pressing up higher. Yeah. So we're going to be looking to add to that short position of the bond market. Let's go to the tips. Let's skip the tips. We'll come back to that another day. It's not time. Let's skip the dollar. We want to talk bottoms here. All right, let's go with the transports. All right, transports, we're looking at a minimum, 7,129 on the Dow transports. That was last seen back here in June of 2016. We overshot it. We may do that again. We may overshoot. What you want to see is an overshoot of the support level, then a bullish reversal bar. We want to open down on the day, then close up on the day. That's a bullish key reversal. That's what we're looking for. Sam, Angela Merkel says almost 70% will be infected. I think that she's infected. I think there's something wrong with that woman. Something really wrong. She sold her entire continent down the tubes. She's sick. The Dow Jones Industrial Average. Guess where we closed at, folks? We closed just off the lows of June of 2017. The lows of June of 2017 is 21,186. We closed at 21,200. We're right there. Can we overshoot? Sure. Might it not hold? Sure. But when you take a look at a daily chart, I have little doubt that we're going to make lower lows here, especially given this volume. But at RSI at 25, that's very low for the Dow Jones. It can go lower though. So maybe that support level won't hold, but I think that we're very close to a support level here. If we overshoot and fail to hold this support level, watch for 20,532 on the Dow Jones. We may overshoot intraday and then reverse to close up above 21,000. the IWM. I'll be honest with you. We sent out an order today to begin buying the small caps using the TNA. Not a vast position, but we dipped our toe in. Why? When you take a look at the IWM on a weekly basis, you have RSI at 20.68. Think about it. 20.68. We are trading down below. You can't even see it here. Let's change the color. I'll make it white. If I can make it white. I can't make it white. We'll make it lime green. You still can't see it. Anyway, we're trading significantly below the third standard deviation Bollinger Band. We're very, very oversold. Can we go lower? We're going lower. In all probability, we're going lower. We're probably coming down here to 110.07. Again, we'll probably overshoot, maybe down to 107, then flash a bullish key reversal bar. Does that mean we are done with the sell-off? This bubble has been burst? No, that's not the way it works. We'll set up for a counter trend rally. It'll be a rip your face off short covering rally. And then in all probability, we will come back down and we'll either retest the lows or we will break those lows or we'll hold them and we'll move on to new all-time highs. Now, if you're worried about buying the market on what you might perceive to be a catching a falling a knife, that's a perfectly understandable concern to have. So what you might want to consider doing is wait for your retest. More often than not, you're going to get a retest of lows. So if you buy into my argument that this support level here is looking pretty good and that we may overshoot, we'll flash a bullish key reversal bar and we're going to rally, and that's going to set the stage for a short covering rally. What you could do is buy a small amount of your position, whatever makes you feel comfortable. Allow for that rally to happen. Allow for a pullback and a retest, just like you had back here. Here's a bullish key reversal bar on the IWM weekly basis. That was the week of July the 5th, 2016, if you want to bring it up on your computer. We rallied. Nice rally. Then we pulled back, put in a higher low. It held. Then you had to buy this breakout. It was off to new all-time highs. So don't feel compelled to have to buy what you perceive to be the bottom. You can nibble. Then you can wait for that rally, wait for the pullback in the next few weeks, next few months. It'll come. Believe me, you're going to get a retest. Guys like me, technicians or OCD, we need to touch what was support. We need to make sure it's support again. And then we're happy getting aggressively long. Not until then. One man's opinion. S&P 500. We spoke about this at great length this morning. I didn't think this morning we were going to see a bottom. I still don't think that we're at a bottom. We could have a tradable bottom here. I think I'm more bearish on the S&P 500 than anything else. We may hold 2472. Ideally, though, we come all the way down here as an overshoot. 2346, spot 58 on the S&P 500. That would mark the lows of December 2018. Keep your gunpowder dry. If the market rallies tomorrow, don't go chasing it. We're not at support levels yet. Don't get suckered in. If you wake up tomorrow morning and you have the futures that are up, triple digit bright green futures, expect that rally to fade. The banks, untouchable. They're going to need a bailout again. I don't even know where to begin with the banks. We are probably coming down into the teens, probably an 18 handle on the XLF. You have to avoid. XLK, you also have to avoid. This is the technology sector. What about shorting? What about shorting the market? It's too late. It's too late. You could short on a counter trend rally, but it's too late for that trade. And I know there are people out there saying short the market right now. No, it's that trade is come and gone. As a matter of fact, we were short of China using the YANG. It was a leveraged ETF putting you short of China, and I booked profits on that trade today. I'll bring up the chart. You can see we rallied right up and into resistance, and we were setting up for a lower high intraday. I think it was a 15-minute chart. Yeah, lower high, and then we began to break down a little bit. So first out, best out. We made those profits real. Manoj, we sold 20% of NUGT early yesterday before the big swoosh down. So we're beginning to nibble back in on the NUGT yet again. And I'll show you the reason why we are bullish, or I am bullish, on the gold miners. The gold miners went down because of the stock market. Now, keep in mind what the Federal Reserve did today was they set the stage for QE4 infinity. Since September, they've been in the repo market buying up 3-month bills, very short-term debt instruments. Now they're going across the spectrum, $4 trillion worth. The last time we had a sell-off like this in the markets was 2008. I'm gonna overlay here the GDM, which is the gold mining index. We'll make it brown in color, and I'm going to also overlay gold. And this is why I titled this commentary with the VIX, because the VIX is extremely important to our strategy right now. I kind of hope that the VIX does another big spike higher. So let's take a look at the correlation of the VIX and gold back in 2008. You can see that when the VIX was surging, gold, or the gold miners, were hammered, annihilated, just like today. It's hard to see here. They're not as annihilated, but they're annihilated. It's hard to believe they're not as hardly annihilated today as they were. Let's kind of try to clean this up a little bit. Let's go with a line chart for the VIX. That kind of doesn't help that much. Let's get rid of the Bollingers. And Pat, this is the chart I was talking to you about earlier that I thought you would like. Why does this not look right? 2008. This is not right. We were at 89 on VIX. This is just saying, oh, I'm sorry. I have to keep the candlesticks up because it's not showing the intra-period highs. let's see if yeah, okay, this is better. Much, much better. All right, so this shows the intra-period highs. So you can see that as the VIX skyrocketed, the gold miners took it on the chin, as did gold. It rolled over. But this time around, you're not seeing as dramatic a sell-off in the gold miners. I know it's shocking. After this week, it's shocking to hear that. But we're not seeing the dramatic sell-off in the gold miners that we did back in 2008, nor are we seeing it in gold. Gold is barely budged. So what's going to happen when the VIX starts correcting? I'm expecting a rally in the gold miners and a continuation move higher on gold. But the VIX is the major problem right now. And obviously the news, the headline news with the virus is certainly not helping things. So I thought this was an interesting chart to review. And why I'm looking forward to a sell-off on the VIX and why I'm going to be looking to buy more gold mining stocks. We go to the questions. Sam, Deutsche Bank. Could you please check the when I was intimation? What is that word after this? I could have avoided some of the big losses. I'm not sure what you mean there, pal. All right. The semis weekly chart. Oh, the notification. All right. I send them to myself. I got it though, dude. I'll check it out. All right. You didn't get a text? Or did you update the notifications page? All right, I'll check it out for you, Manoj. All right. All we're doing here on the semis is piercing support levels. Okay, you got it. I think that ultimately we're coming down at a bare minimum on the semis down to 99. I think that ultimately we're coming down here to 95. What is this? 90, 96.52. We're going to retrace this entire move down. So, long story short, I hate tech. I don't want anything to do with tech. Now, the biotechs, they're getting killed. Are the gold miners impacted by the credit crisis? No, but they benefited from the QE programs that caused the Fed's balance sheet to expand so much, and now we're going a lot higher than what we did during the first, three QEs. We're going a lot higher, so I'm expecting a similar event to occur. Santiago, buy when everybody else sells and sell when everybody else buys. Yes, but only at support levels. Simple formula. Yeah. Again, it goes back to the VIX. There's a ton of fear out there, and I always get a kick out of this. The fear and greed index. We're at a 2 on fear. We were just at extreme fear this time last month. I mean, we were extreme greed this time last month. So a lot of fear out there, and that's good. Who I feel bad for are the small guy, the people that they're they're not coming back to the market again. And it stinks for them. All right, let's revisit. All right, Nugget. It hurts to look at this weekly chart, um, but we did close at a support level today. So that's one bit of good news. Does that mean that we can't break? Of course we can. So you were looking for a support level. We're right there. We closed at 1260. 1246 is the number. We did do an overshoot today. The low for normal hour trade was at $12.05. So we're right in that range. Oil. Oil has RSI on a weekly basis 21.43. So I think we're going to get a counter trend rally fairly soon on oil as well. Daily chart. We did break to a new low today. Yeah, man. No bueno. No bueno. Here's a daily chart of NUGT, and I was betting on a close above 1450, but we couldn't even get that. It's hard to believe that we're still at RSI nearly 28. So, Pat, you wanted me to go over IBM? So here's what I was looking at, Pat. Going back to the lows of 2018, December 2018, $100.05 per share. And here we have, if that doesn't hold, 98.87. So again, what you may get is a rollover, an overshoot, I should say, below this $100 level, and a retest of 98.87, and then a reversal off of that level to close out the week or the day, whatever, back above the 100.05 mark. And this is the yield curve, folks, and it's kind of stunning. The yield curve is really beginning to steepen now. And that does not bode well for stocks. So I'm gonna assume that as long as this yield curve continues to steepen, that any rally in stocks is a short covering rally. Hey Norris, XOM and CVX. You want to know which of the two is best for a rally? I don't know what's going on here. Hold on. Okay. Monthly view. All right, this is better. All right. I'm leaning towards ExxonMobil, but I think it's going lower. Although we did see a bit of a rally on CVX, but the sell-off on Exxon is far more mature as measured by your Stokes versus Chevron. I can't get a break today. Okay. Yeah, XOM, this is unsustainable. So from a contrarian view, I'm leaning towards ExxonMobil because this is not going to last. You got it, Richard. The lows of the day on Chevron coincided with the lows of the closing lows anyway of 2015. I'd still like to see some further downside here. Exxon on RSI. Exxon is my favorite. Exxon on a weekly basis, RSI 10. That's ridiculous. Versus 20 for Chevron. I like Exxon better. It's got more downside. So going back to the monthly chart, where would I look to buy? If you can get it between 34 and $35 per share, that would be a nice entry point. But you want to scale in. You want to scale in. I go with Exxon. Let's just do a quick pick at their valuations. PE 11. Oh, no doubt about it. Exxon, by far. Chevron's way too expensive. I would go with Exxon. That a fact, I didn't know that. All right, let's see, Pat. We should keep an eye on Oxy. When did Carl Icahn up his stake, Pat? When Carl Icahn speaks, we listen. Nice. RSI 14.08. But that's on a daily chart. What matters most, wow. I think that we're going down to $8.75 per share. Last seen back in June of 2003. The Stokes is still rolling over here. I still think we're going lower. You had a bounce today, but the market sent you a signal that there are a lot of sellers above. So I think they're going to sell this off. 5 hours ago, let's check the after hours, see what happened after hours. Not much. Oh, this is probably the news here. 5 hours ago, it makes sense. That's probably why it closed up. All right, what else do we have? CCL. I was looking at CCL earlier. And I like the fact that they have they're dry docking a lot of their ships for a while. I got to tell you, I'm probably going to be a buyer. Look at the yield now. I know this is not safe. The yield is definitely not safe here, folks. But even if they cut the yield by half, it's still going to be yielding, around 6%. I mean, what's wrong with that? I like it at between 12 and 14. In this range here. Let's throw some trend lines up here because I'm going to be a buyer. I'm getting my list together. And that space, Virgin Galactic, I'm going to buy that too. A couple of shares. Annotate. Right in this trading range here. RCL. Notice how, folks, we're not dealing with daily charts today. It really doesn't matter. These are really trades that you want to put on because of this is yielding 10%. Again, it's probably not safe. I like RCL at 27, between 26 and 27, because what you had there, we had an inverted head and shoulders setup. Left shoulder, head, right shoulder. Here was your neckline. We've fallen back down below that neckline. So we need to retrace down to, I like 26. 25, 65 to $26 per share. Now, Arthur? No bid on gold. Let's check out oil. Oil beginning to catch a bid. I think he just bumped it up. Yeah. How high was this? This is up in the 40s, right? Oh my God. Oh. I think ultimately we'll probably come down to the top of this base. All these poor people up here. It's terrible. Viacom? Why'd you do that? C shares? It's oversold, but it's going lower. We have RSI 15. Who'd have thought? Viacom RSI 15? And these are bargains. You're not going to see these. You're not going to see this for another 20 years. Yielding 5%, nearly 5%. We're probing the 2008 lows. Where do we close? We're a few dimes away from the 2008 lows. I would get ready to pull the trigger here. Four-hour chart. Looks like we're still going to go lower. So you're right there on Adobe. Down another 50 cents, a dollar for an overshoot. Yeah, I can go over CCL again. Here, I'll bring it back up. Really quick, Rich. I like it in this trading range here. So if it drops down below 14 to 12.35, I like it in this box. Because those are the extreme oversold levels of 2009, 2008, prior to that, back in 2001. That's why I like it. I'm down in that range. Let's go to Pat. What was that symbol you wanted me to go over? AWK? Animal. Good for you, Pat. Good luck with it. Pat just bought space in the after hours. To play a rebound, short cover and rally, what would be a good index to play? QQQ? No. I wouldn't do the Qs. Qs were very weak. Remember what's in the Qs. You have a lot of technology, right? What's not doing well right now? Technology. The spiders, not so much. I like the small caps. I have to say, I like the small caps. Eric, dipping your toe in now, you'll pull your foot out and your toe will be okay. That's quite possible. AWR and AWK. This is just beginning its decline here, Pat. This is probably a low beta name, but it had a heck of a run here. I think that it'll probably pull back to 67.31, maybe down to 63. But this is a bearish reversal bar on the month. Month's not over. Maybe it'll rally back, but it's not looking good. Let's take a look at the weekly chart. Yeah. I think the next stop is if we don't recapture 72.50. If we close down below 72.50, we're coming down here to 65.55. If that fails, 62.12. I think you have a lot more downside here. You're in a confirmation breakdown, double top. We broke 82.26. Lower lows to come on AWR. NEE. All right. We finish off with Pat, AWK. Another American Waterworks. This is just the beginning of the sell-off here. It's stalled out. This looks to be less beta, less volatile. I think the next stop is going to be, well, it held support today. It rallied off of support at this one, let's call it 116 range. If that fails, which it probably will, next stop is down to 111.81. You have volume out there, so you have institutional distribution. Yeah, complete round trip. I like 111.81. That's probably where we're going. XLU, the utilities, last I looked, they were not looking good. No, it's not time to nibble yet. They're probably going to bounce. They're a bit oversold on a daily basis, but ultimately we're probably coming down here to 49.97. If that fails, to 45.99. You know, we're leaning into the third standard deviation Bollinger Band. We're going to pop here fairly soon. But I think we rally and then we roll over again. And the time you want to start looking at the utilities, keep in mind that the 10-year yield this week flashed a major reversal bar. If they do not have this under control, the Federal Reserve, and this continues higher, you need to avoid the utilities. So what I always like to do, let's bring up my chart of the utilities, and I'll show you exactly what I mean. The utilities trade inversely of the 10-year yield. Let's overlay it. Not the right symbol? No. Sorry, folks. We'll make it blue. All right, so you can see that as the 10-year yield declined, utilities rallied. Now you're seeing a spike up in yields, and the 10-year took it on the chin, along with other stocks as well, trading with the market. But what's going to exacerbate this sell-off even further is if you see the 10-year yield continue higher, right? So you want to see that come under control. Terrence, you joined it too. Bunch of characters. All right, we're going to leave. This is going to be the last symbol. And if I could ask everybody, if you haven't already done so, if you could ask you to hit that like button, I'd really appreciate it. Thank you very much. But we're not seeing a bid. I'm reading your comment, Eric. We're conducting airstrikes on Iran. There's no bid on gold. Nothing. We're conducting airstrikes on Iran or in Iraq. Let's bring up the news. Oh my God. They're underway in Iraq. And it's Iranian-backed militias. That's why you're not seeing a bid. No worries, Josh. Laura, I'm online. So this is why you're not seeing a big rally in gold and oil. We're just hitting militants over in Iraq. We'll keep an eye on it, though. I'm not going to be the least bit surprised if if this expands further. You think it's coincident? Oil is crashing, and now we're doing airstrikes in Iraq? I don't think so. All right. NEE. NEE next support level. Let's go to a monthly chart. You have the 20 period moving average, which may act as support. I'm not a big believer in using moving averages to act as support. I believe in historical price levels. And the next one is at 181. So there's some more downside risk here. So I would avoid these shares. I would not catch a falling knife. U.S.-led coalition soldiers killed in rocket. Oh, God bless. Okay. IWV. Oh, the Russell. I kind of already went over the Russell. Oh, this is the Russell 3000. No wonder why it looks different. I like 134.96 on IWV. That's the December lows. And folks, you're going to see on a lot of these charts, the 50-day moving average threatening to take out the 200-day moving average. And all you're going to hear, as sure as God made green little apples on CNBC, on Fox, those morons, you're going to hear them say the death cross. They're going to try to get you all afraid. You click on whatever link they want you to read about the death cross. You want this to happen. It's a foregone conclusion, because normally what happens is that after you get the negative crossover of the 50-day down below the 200-day moving average, it's in the rearview mirror. You get a counter trend rally. I'm not saying we're going back to all-time highs, but in fact, the 50-day will act as a declining ceiling on the shares. But normally, after you get that in the rearview mirror, that negative crossover, you get a rally. At least 10 wounded as barrage of Katyusha rockets hit where U.S. personnel are housed. Okay. And we really have no idea what's going on over there right now. All right, VTHR. Vanguard, Russell 3. This is kind of like the same deal, right? Oh, but we've already taken out the 18 lows and rebounded. Why? I'm not sure why these are so much different. It's the Russell 3000. Yeah, I probably will be, Pat. I probably will be. I'll be doing swing trading today, tomorrow morning, given the market volatility, and now with the fighting over in Iraq, I'll be on. What's that, Terrence? What do you want me to do? All right, so BTHR, I like the fact that it popped. A little bit of a pop today. You have your Stokes putting in a higher low. Like I said, I like the smaller caps better than the large caps. So it's looking good. But it's got to hold these lows. So I wait to see how we finish out the week. Maybe what you want to do is this. Take a 2-hour or 4-hour chart. Allow for a rally, right? Then wait for the pullback. Make sure that this holds. This rebounded 11 points tonight. Is this a bad tick on VTHR? What's the other one you requested? It's the same. It's a Russell 3000. It's a different price action though. IWV. Unless Oh yeah. Yeah, Terrence. I'll be on. Yep. You don't have the same price action on these two ETFs. I'm confused, to be honest with you. They're both the Russell 3000. This one here looks as though it's going to break. It's going to go lower. IWV. And this one here, the VTHR, I think it's going to break as well. I'm not understanding this intra-period price action though. I get the feeling that's a bad tick. Last one up, Home Depot. I'm going to sign off after this, folks, because I'm starting to fade. This is just beginning to sell off. All right, so where we're at right now is at the lower band of support, this rising lower band. If that breaks, we're coming down here to 160 on Home Depot. For more of an extreme oversold price target, 152.88. But to be fair, the month is not over yet. Maybe we'll rally back and we'll hold the support level. So I wouldn't go shorting it. I would just wait to see whether or not. As a matter of fact, what you could do here is this. What's the low? Low is 184.84. Let's use 181 as a break point. Whereas if you break down and close down below 181, you've confirmed you've broken down below a long-term trend line. I don't like the RSI. I think we're going lower. Stokes are trying to fight to put in a higher low here. We rallied today. It failed. Sellers moved in. It's a victim of the market. It's a victim of liquidity. People are they're receiving I'm starting to fade. Sorry. They're receiving margin calls, and they need money to satisfy those calls. They're selling everything they can. I'm not saying it's right that they're selling Home Depot, but they're selling it. It's falling victim like everything else. You're welcome, Arthur. Good night, Pat. Everybody, if you haven't hit the like button, if I can ask you to hit the like, subscribe, share with a friend, and everybody have a great night. I'll catch you on Swing Trading Today tomorrow. Be well.